Assalamualaikum warahmatullahi wabarakatuh and good morning to my lecturer, Madam Rafidah binti Abdul Rahman and my fellow friends. Today I will present topic Accounting Framework and Concept. Presented by Gayatri Anak Perempuan, Vabarasan, 15DAT20F 2019 and Gugan Raj Anak Lelaki Tayalan, 15DAT20F 2033 and me Muhammad Aiman bin Azmi 15DAT20F 2035. Let's begin with our content before we presenting. Regulatory bodies in Malaysia and development of accounting standard in Malaysia will be presented by Gayatri. Malaysian private entities reporting standard will be presented by Google, and Malaysian financial reporting standard by Aiman. So last but not least, we will discuss three conceptual framework, that is fundamental accounting concept, further overriding concepts, and last but not least, others accounting concept and principle.
Good morning, my name is Gayatri. I'm going to share about financial reporting framework in Malaysia. They have a regulatory bodies in Malaysia. One of the regular bodies is MIA. MIA is full form of MIA is Malaysian Institute of Accountant. MIA is an accounting qualification and membership with the Institute of is a platform for the individual who like to professional who like to practice as accounting in Malaysia. One of the activities that carry out from MIA is determining the qualification of administration as a member of the institution, providing the training and education by the MIA for the individual who wish to practice in accounting professional, and examination, and also we got promoting the interest of accounting professional. Malaysia Accounting Standard Board (MASM). The MASM is published under Section 7 of Financial Reporting Act of 1997 as an independent to develop and issue accounting standard for the preparation of financial statement, which is required to prepare or log out under any law and the Central Bank (BNM). Secondly is Financial Reporting Foundation (FRF). Malaysia Accounting Standard Board responsibility is with respect to standard setting to Financial Reporting Foundation is responsibility for overseeing MASM performance and financial arrangement. MASM together with FRF make up a new framework for financial reporting in Malaysia. Next is developing of accounting standard in Malaysia. One of the accounting standard is International Accounting Standard Committee IASC, and also known as the International Accounting Standard IAS. In Malaysia before 1997, all IAS and IASC as considered by a common working technical community joint set up by the Malaysian Institution of Graduate Public Accountant MICBA and Malaysian Institution of Accounting is proven by the MICBA and MIA and IAS were issued as a proven accounting standard and becoming specialized as a part of generating asset accounting principle in Malaysia. Other than that, in 1997, the role of standard setting in Malaysia was taken over by Malaysia Accounting Standard Board MASB. In its function under Art is to set the accounting standard for the preparation of financial statement of entities, which is prepared by BNM, SC and SM. Next is the role of IASC was taken over by International Accounting Standard Board IASB in 2001 in the developing of International Accounting Standard, now known as International Financial Reporting Standard IFRS. In 2004, the accounting standard issued by the MASB were renamed as a Financial Reporting Standard FRS and part of plan to align with IFRS. Finally, in November 2011, MASB issued a new accounting framework, Malaysian Financial Reporting Standard Framework MRFS, which fully covered by Malaysia Financial Reporting Standard Framework. This framework was effective on the 1 January of 2012 and apply all entities other than private entities. On 14 February 2014, MASB issued the Malaysian Private Entity Reporting Standard MPERS, which is effective from a manual period beginning on after 1 January 2016.
Good morning everyone. Today I will explain about Malaysian Private Entities Reporting Standard, shortly MPERS. Okay guys, what is MPERS? MPERS. The Malaysian Accounting Standard Board launched MPERS, Malaysian Private Entities Reporting Standard, on 27 October 2015. MPERS is the new financial reporting framework for private entities issued by the MASB, and it replaces of current private entities reporting standard PERS framework. And the MPERS self-contained standard with 35 sections covering all relevant areas for financial reporting. Okay, next, definition of private entities. Private company incorporated under the Companies Act 1965 that first is not itself required to prepare or lodge any financial statement under any law administered by the Securities Commission or Bank Negara Malaysia. Second, is not a subsidiary or associate of or jointly controlled by an entity which is required to prepare or lodge any financial statement under any law administered by the Security Commission or Bank Negara Malaysia. Okay, now I will show you all effective of MPERS. Financial statement with annual periods beginning on or after 1 January 2016. So, the private entity could also opt to adopt the MFRS framework. All private entities which adopt either the MPERS framework or the MFRS framework must adopt the framework in its entirety.
Thank you, Gugen. MFRS, Malaysian Financial Reporting Standard. Before the MFRS Financial Reporting Standard follow Act 1997. MFRS have issued by Malaysia Accounting Standard Board MASB on November 2011. These bodies are aimed for non-private sector. Important of financial reporting is to know the performance of the business for the year ended, to share the info to the shareholder or stakeholder on AGM, Annual General Meeting. Before we submit financial statement to Security Communication, Central Bank, Bank Negara Malaysia and SSM Suruhanjaya Malaysia, there should be approval by MFRS, Malaysian Financial Report Standard. This is followed by the law of Section 244. Every financial statement should be approved by MASB authority as MFRS, Malaysian Financial Report Standard. If there are any conflicts, account statement should be prevail. All recorded must be in Malaysia currency is RM, Ringgit Malaysia. MFRS is to make all the standardized, to easy make comparison, and it will be difficult. It's not accounting standard for low user need to study account policies every of company in Malaysia. So that's because MFRS should be have it. That's the function of MFRS. Last but not least, MFRS is to check the fairness and make sure all follow the accounting entities and conceptual that we explain after this.
Next is fundamental accounting concept. One of the concept is going concept. This is called in BM is usaha berterusan. Usaha berterusan ini, andaian ini menyatakan bahawa semua aktiviti kewangan perniagaan diandaikan beroperasi untuk tempoh masa yang tidak terbatas. Hal ini dibolehkan perniagaan beroperasi dengan tujuan ke arah jangka panjang. Andaian ini boleh adalah sangat kritikal kerana tidak ada titik air dalam operasi perniagaan. Selain itu, separate entity. Separate entity is called in BM is entity berasingan. Entity berasingan adalah andaian ini menyatakan bahawa peniagaan perlu menyimpan rekod perasingan dalam rekod transaksi peribadi, contohnya mengambil cash untuk membayar bil rumah, mengambil barang niaga untuk tujuan menyediakan anda sendiri. So, contoh-contoh macam ini, semua urus niaga ini rekod di bawah entiti berasingan. Contohnya milikan accrual. The accrual basic of accounting all that the revenue will earn and the expenses we have spent at the time they are taken place and not the time they are paid, actually paid. The matching principle of the matching of revenue earned against the expenses in same period in of the order to generate the net income or net profit or net loss of the financial statement. The matching principle is the important key for the accrual basis of accounting and does not exist under the cash basis of accounting. Next, we're going to see qualitative characteristic of financial statement. Fundamental characteristic. One of the characteristic is relevant. For the information to be useful, it must be relevant to the decision-making process. The information is considered relevant when it's able to influence the decision-making of the users. In order to be relevant, the information must be material and proven in time to influence the decision-making. Material is an important information. It will affect the decision-making for the reasonable user of the statement. Second is faithful representation. Financial statement and the information must be faithful represent and must be complete and reliable. The financial statement must be complete all the information necessary of the user to understand the report should be covered, and also the financial statement must be free from the error. Next is analyzing characteristic. Comparability. One of the character is comparability. In order to make decision, user of financial statement need to compare the information present over a time period as well as between business entity. It is only possible if the accounting method are used consistently from time to time. Second is understandability. The accounting information should be easily understood by the user. The user should have a reasonable knowledge of accounting and business to able to analyze the information present in the financial statement. Third is timeless. The financial information is only useful when it is present in on time. The financial statement do not be delayed and always in on time, and it will help us to make decisions. Verifiability. The user that the information has been represented faithfully and the result will similar should the financial statement be prepared by the other accountant.
Now I am talking about further overriding concepts. Overriding or crucial principles that underpin the preparation of financial statement. First, materiality. Second, prudence. Third, consistency. Fourth, substance over form. First, materiality. The meaning of materiality is a misstatement which affects the decision of a reasonable user of financial statement is deemed to be material. Continuously, a material item must appear or be disclosed as an separate item. If not abstract judgment, it is immaterial and can be merged with other items. A separate disclosure for it considered unnecessary. Non-separate disclosure does not affect the judgment of the reasonable reader of the statement of financial position. Secondly, prudence. Meaning of the prudence is caution or to play safe. Second, do not recognize profit unless you are very sure of earning. Continuously, accountants should make certain that assets are not valued too highly. And then liabilities should not be shown at values that are too low. The business often use it to justify their lower profit and hence lower tax liability. Lastly, source of dispute with the Inland Revenue Board. Thirdly, consistency. The meaning of consistency is a business must choose one method of accounting treatment and apply it consistency in every accounting period unless there is a compelling reason to change the method. If we continuously make changes, it will be very difficult for the reader of the final accounts to observe any trends. For example, rises, fall in sales, stock, wages, cost, profit, margin, and etc. inconsistent, and this turns out to be material. We must give a full explanation either in the statement of profit or loss and other comprehensive income itself, or in the statement of financial position, or in the notes to the accounts. Lastly, substance over form. The meaning of substance over form is transaction and other events should be accounted for and presented in the accordance with their economic substance and financial reality, and not merely in their legal form. This is the example of substance over form. Mr. Lee bought a car from KL Auto Trading. He paid Rn 5,000 deposit, and the balance of 45,000 was paid through a loan from Maybank and signed a high purchase agreement. Legally, the car was owned by Maybank since the bank was registered as the legal owner. However, in reality, the car was kept and used by Mr. Lee. All related repairs to the car were borne by Mr. Lee. As such, the car must be recorded as an asset by Mr. Lee and the amount due to the bank as a loan liability.
Back with me again. Third one is other accounting concept and principle. They have divided by sevens. First is objectivity. It means it is quantifiable, boleh diukur since it easily to be measured. Secondly, historical cost. It refers to actual costs that we paid at first place. Example, I bought this X70 3 years before at price 99,800. So the historical cost is still the same, is 99,800 although it's 3 years ready. Thirdly is money measurement. Only activities that can be measured in terms of money should be recorded but non-monetary unit events that cannot be expressed in monetary unit will not be recorded. Example here, the Belgium buy Lokman at 20,000, so the 20,000 only will be recorded. But the score, the attitude will be not recorded at all. Fourth is realization. Revenue only can recognize after the service or product has been given to customer, and we realize after receive cash or legal owner. Next, fifth, dual aspect or double entry. There are two aspects of accounting, one represented by assets and one claim against others. They both must be equal to each other. Example, accounting equation and financial position. Let's move to the sixth, time interval. Is the time accountant prepare financial account of business. The period known as accounting period and financial period. Mostly prefer financial year coincide with their taxation end. Last but not least, the seventh, stable money. Time value of money. You can refer to the picture. Then same amount in the future, today money worth more. It's because of inflation. But we will still use same income and nothing change. Here is all our team reference. Thank you so much. That's all from us. Any question, feel free to ask. We love to hear question from you all.